So let's get started, Nick. I'll just run through a quick introduction and then we'll go through. Nick is an experienced senior technology and business strategy leader with over 15 years of commercial experience. Currently, he's an advisor and mentor to over 50 tech startups and globally from Series B and C stages across multiple industries. He transitioned from a successful corporate career with the likes of GE in the UK and funded by me in MENA, now to an advisory role with startups and is part of the senior leadership team at Vestigos.
Okay, thank you, Rishi.
Nick has lived and worked in Greece, UK, and UAE. Holds a BSc in computer science and engineering and an MSc in information systems. Nick, welcome to the show.
Thank you, Rishi and Gautam. Great to be here. Thanks for inviting me. So we start by just a bit of background about me and what things I've done.
Absolutely.
Great. Okay. So first of all, originally I come from Greece, as we just talked about a few minutes ago. But I've been living abroad for about 20 years. Initially, I went to the UK back in 2004 to do my master's degree in information systems at Surrey University, where I'm today. I'm also a startup advisor there as part of the alumni. And then I lived in the UK for about another 13 years after my master's degree. I worked as a developer at the beginning for a small Italian company. And then in 2008, I moved to GE, a huge company at that point, still big, but not as big as it used to be when I joined. And I stayed there for about 10 years. And before I left 2018, where I relocated from London to Dubai in 2018. So my background is technology. When I was working at GE, I had the opportunity to lead large-scale technology programs, operations, data management, digital transformation. GE at that point had multiple business units from industrial like oil and gas, aviation, healthcare, but also financial services, which was also my last role. In parallel with my corporate, experience, I did my first startup when I was living in Bristol, by the way, in 2011. And that's how I entered the whole ecosystem of entrepreneurship, startups, how you raise initial funding, how you convert an idea into a product. Mm-hmm. So these two experiences running in parallel for some time. And when I moved to Dubai 2018, I wanted something new in my career. I said, okay, I've done 10 years of corporate. Let me try something different now. So I worked for a funded by me. It's a very small company compared to GE, obviously. It's an equity crowdfunding leader in Nordics that they wanted to set up in the MENA region. So I was, for a few months, the head of operations and technology here, had them to set up and roll. And then after that, I set up my advisory firm at the end of 2019, beginning 2020, where it's a boutique advisory. We work with technology startups mainly around the globe. It's not just the Middle East. And the majority of the clients sit between what we say idea, pre-seed, seed stages. We have a few which are Series A, Series B plus, more mature companies. The primary focus is the early stage where, they need more guidance. They need to shape an idea and to be in the right path for early success, if you like. And it's both advisory and mentorship, because also we mentor to the university some startups. So this is just a quick nutshell I'll be doing. And let's hear more questions and we can elaborate more.
Absolutely. And thank you for that, Nick. Appreciate it very much. I wanted to start off with your recent blog post, but before that, I was intrigued by what you just said. You had a startup that you started off in the UK itself, right? And then you moved to Dubai. How did you transition out of it? And,
Yes.
and yeah.
The first startup failed.
Okay.
I'm not saying I'm proud to say that, but it's a huge learning curve, because in some cases when, you need some VCs say we want to invest in founders where they have failed in the first one or two startups. The first time I heard that sounds a bit weird. But if you think about it, where all this learning curve, all the mistakes you did as a first-time founder, I want to say ensures, but it's a more reassurance that the next time you do it, you're not going to repeat, or you're going to be way better than the first time. So the first one failed after 3 or 4 years. And I will tell, if we discuss about the failure types, what goes wrong with startups, I am probably one or two of the core mistakes. I did the same as well. Okay. So the transition, I had an exit from GE in 2018 because the board decided to sell the financial service, divest the whole business unit
Yes, I
globally.
remember.
We're talking about 90,000 people left in Chief in 2 or 3 years. A few $1 billion of transactions happened globally. So I had an exit as well. And then the circumstances were great. And then I decided to move from London to Dubai. I don't regret it because it's great being here. If you like startups, entrepreneurship, technology, it's a great hub.
Yes, and it's a great place to live. It's a multicultural city, somewhat like London. Lots of good.
Exactly.
I thought let's get started with your recent blog post, and you were talking about the role of startup studios and how difficult startups are. In fact, as you talked about your own failure, I remember very well graduating from college. Lots of my friends went into startups, and many of those are not around today. And startups is a difficult business. They say it takes about 4 startups to finally succeed.
Get one right.
Yeah, get one right. Exactly, 4 to 5 startups, and so it's a very difficult business. And you were talking about the emergence of startup studios and how that might help fill the gap, push the founders and co-founders, towards better probability of success.
Yes.
Can you tell our viewers and more about this, more about your idea?
Yeah, sure. I mean, and it's not actually my idea. Being startup studios have been emerging for the past probably 4 or 5 years globally, not just the Middle East, US. And they have a completely different, I would say, approach and positioning compared to a VC. A VC mainly, I would say, probably care about the deal itself and make sure, obviously, they can have the best return on investment for their investors. Obviously, they will support. They will, they want you to be successful because at the end of the day, your success is their success as well. But they're not going to put their hands dirty with operations on day-to-day, support. That's not what the VCs do. A startup studio, in contrast, is one which is, you may be a solo founder coming from the industry, you may have a great idea, but maybe you don't have a co-founding team, or your skills to develop a solution are very limited because at the end of the day, you're a businessman or business lady and you need support. So what the startup studio will do is will fulfill all the skills that you lack, okay? And help you to do marketing, help you to do, partnerships, develop a solution for you on your behalf. They will have teams, and maybe you should also play your co-founder role in this, okay? So their involvement is much more hands-on, day-to-day operations. And that's why you see most of them, they don't take dozens of startups a year. They intake probably about 3, 4, 5, maybe 10 if they're quite big, but it will be a small amount of startups, and their engagement with you is for the long term. Okay, it's not just 6 months, one year we do the deal and then we walk off to something else. They're there to stay because they will exit with you. That's the position they have. And I found this. My question in this post was, I see that a lot of founders now, they struggle to find a co-founding team because it's not just a co-founder is not just an employee, right? It's not someone you're gonna hire from the market, pay him a high salary. Co-founder is someone who believes in your vision. He wants to follow. He wants to be part of the team. Has the same energy and passion as you have, being part of your team. Now, the struggle there is not to find the right profile. It's more about, do you have chemistry between you? Can you operate as a team? And this is where I see. I mean, from my experience, my experience, but because I'm working with many startups and entrepreneurs, a lot of them struggle to find co-founders. Maybe startup studio can play that role since it is within their thesis, the area of interest as well.
Right. Can you share some examples of successful startups that have come out of it and successful startup studios in your mind?
Yeah, I mean, I wouldn't like to advertise any particular, to be honest, but
Sure.
I know from statistics that the failure rate globally for startups, they say you do your own, is 90%. That also includes US within the first 3 years. Now, with the startup studio, that drops significantly because they can exit maybe 30, 40% out of the startup they get involved. A VC usually is 10 to 50% if they're very good from the portfolio. And also, if you see the comparisons when it comes to IRR and things like that, they're way higher compared to a traditional VC. Okay, so now there are obviously drawbacks on that, which we'll discuss if you want. But usually, those startups I've seen, they're with you until a Series A. So they do multiple rounds internally or through the network of investors they have, until you are at a point where you're off to go. Series A means you survived the valley of death, as we say. So you are kind of be able now to look for more scalability. So that's the kind of statistics I view. There are also some very interesting posts on LinkedIn around this. They compare the exit rates and the return investment for investors. And there is always scoring much higher compared to a traditional VC.
We'll of course link to those that you alluded to in the show notes, to the the LinkedIn posts about these, including your post that we were just discussing as part of the show notes of this show. So moving on, I thought before we delve deeper into the world of startups, you've now been in Dubai. You came in just before the pandemic. What's your experience been from a perspective of startups in Dubai? How's the culture changing there? What kind of support do you see? And when someone's considering Dubai among other places, Dubai also has a high cost of living as well to think about as compared to other places. What are the pros and cons in terms of looking at Dubai? And now with Saudi coming up as well, versus vis-a-vis Saudi and other parts in the region as a startup hub.
Okay. So when I came here in 2018, I mean, the number of startups you will see at the Series A status, which means companies with 3 years of revenue, and they're going for tickets of 3 to 10 million USD. Okay, they're just a handful, just a very few. Okay, now fast forward 5 years later, almost 5.5 years later. You see ticket sizes. HubPay, for example, if I remember well, raised over $20 million. Tabi now, which is one of the first unicorns, created within the region, raised 600 million in debt. I mean, you see that the maturity level over the past 5 years, accelerated in a great pace, which is probably you wouldn't see necessarily in more mature, startup. The Western world where startups are more mature. So they are going very fast. They set up very impressive accelerators like Hub 71, Fintech Hive. They're regulators for ADGM, DFC for regulated fintech. And there is also the ability for funding, private and some government initiatives. So they're moving very fast, okay, when it comes to that. And I guess this kind of success that you see is what Saudi, I wouldn't say make them jealous, but they want to copy that model. And obviously their economy is way, way larger. They have way more resources. They can scale this in unprecedented levels for the region. Okay. Now going back to the cost of things that you mentioned, yes, it's a very expensive location to live. Some of the accelerators here, what they do, they offer you office space, hot desking, and some accommodation in some cases, and they give you, because here you have to set up a business entity, you need to pay for the license fee every year, like we do for my company. They waive this off in some cases for 1-2 years until you are mature enough to to be able to support it financially. So they give this kind of incentives where, especially for entrepreneurs outside the region, they want to come and set up here. And I mean, they don't necessarily give you funding in terms of a check, but they give you the exposure. They have a huge network of investors, companies that are interested in this fintech high, for example. Most of the case studies come from the banks themselves. They have sponsors. So the networking they give you, which saves you a lot of time and effort if you want to build it on your own. So there's a multiple, incentives from multiple perspectives that help you to set up business here. That's why you see many startups, every year there are more and more setting up, not necessarily only from the local population here, right? Experts and local, they come from Egypt, from India. I mean, we have many examples of, companies that came set up here when they have easier access to funding in some industries, obviously.
Yes, I know. Dubai is clearly
and Abu Dhabi,
at the forefront.
Yes.
Of course, Abu Dhabi as well, but at the forefront of the startup success story in MENA. And they're doing a great job. Like they've done before, they are one of the thought leaders.
And just to give an indication, sorry to interrupt you, I've been going for the past 6 years. I'll take the time after COVID, because COVID obviously was after COVID, they usually have 600, 700 startups. Last year, they had, I think, 800. This year, they had 1,200. So it's growing every year. So that's why they had to split between different locations for the first time. Startups was
a 50% growth.
Yes, so every year more and more stands, more and more, and obviously AI, blockchain, clean tech now. After COP28, there is a lot of focus around ESG, secular sustainability, and all that stuff. So it's really growing very very fast, and and there's so many events. I mean, it's not just GITEX, which is the most famous. Is AI everything? There's seamless. There's every time and there you can actually go to event if you have the time. Every week there's something going on.
Yeah. Yeah. And GITEX is, of course, where Gautam initially got in touch with you. GITEX,
Correct.
Gautam was representing Apna there.
Yes.
In Gitex, they were most of the startups were into AI and the blockchain and the bots. They were every other booth was working on the chatbots.
Yeah, and that's a fascinating development, though, with OpenAI changing every few months. It's a changing landscape, so to speak. Also, I mean, you changed geographies, changed totally. I mean, I find that fascinating as well. Changed your career line from, a very corporate line to this, but you adapted very quickly. I mean, you moved on quickly. You've built a name for yourself. You are, clearly sought after advisor for these startups. Part of it, I can see that from your helpful nature, you're always helping everyone, whoever meets you. That's what Gautam told me first thing, and Nick so helped. But I was wondering, a lot of people go through transitions. They do something in their earlier stages of life, and then they feel like either they want to become entrepreneurs, or they want to become artists, or they want to, do a second calling, as so to speak, just like you have. And I wonder if you could share a few words of advice on the struggles that you faced, what are the things that you did well, and what would you do better if you had a chance to do it again?
Okay, yeah, sure. I mean, the transition was done by choice, to be honest. I was not really forced to. I always like entrepreneurship. That's why I did my first startup. Then when it failed, also I had this in my mind, what if I had done this? What if I have done that, the other thing? So, and this learning curve, which I've learned, is like doing an MBA, to be honest. I mean, you get skills that I had no before, because when I was working at GE, my job was within the technology. Yeah, I did some cross-functional projects, multiple stakeholders and things like that, but I was never in the level to understand, accounting or legal or, marketing. Had no, notes whatsoever covered within when I was working in corporate. So when you do a startup, you need to wear multiple hats. Okay. So the transition was by choice, but, and I don't regret it. The challenges you mentioned is when you come from the corporate world, you set up in your own, because effectively this company I have now is my second startup, which is now successful, is how do you build your network? Because when you are in a full-time position, you don't really care about, I mean, you care, but you don't care so much about bringing business or bringing new clients. I was not in a sales type of job, so I was never concerned about that. But when you do your own business is, and as an advisor is, okay, how do I get business? How do I get, I'm not a consulting firm with the brand of PwC, Y, or McKinsey, right? Nobody knew what Vestigos was when we set it up.
Right.
So the challenge was how to network. So I went to dozens of events here. That was before COVID, obviously. So it was more physical. So I had to go there, network with people, meet people. I was new in a new country, new culture. The culture here is not so much different from Greece. It's very it's quite similar in a few things, but compared to UK, is way different, right? So I had to adjust here to the culture, to the way people communicate and do business. So it's a lot of word of mouth. I mean, here, that's how I operate when it comes to the local business. And then I had to explore opportunities where I can use digital platforms, get some of the projects, and start building a profile where, people recognize my work. Okay. So this combined, obviously, I would say helped, because a lot of things went to remote. Okay. So effectively, this physical networking that used to happen, you had to do it through Zoom. Okay, so that helped a bit, and timing also plays a role to whatever you do. So that helped to grow, and I mean, we're the fourth year now of in the consulting service we offer, and every year it's growing more.
That's great to know. I think the other challenge a lot of people have when they start off entrepreneurs, I hear from entrepreneurs, even personally, when went through an entrepreneurship journey, is the managing the personal side. Meaning I don't know about your personal this, but my and a lot of my friends, we are married to a partner or staying with a partner. They are committed to one version of you who is going to a corporate job, earning well, and so on
It's
and
a
so forth.
fine
And
balance.
then,
Yeah.
and then you suddenly decide, hey, the entrepreneurship itch has hit me. I want to risk it all, move to entrepreneurship. No guaranteed payments, certainly not in the first few years, or whichever venture, if you're going to start off new, right? It's a risky thing. And so I don't know, having gone through it, having done it successfully, do you have any words of advice to others who are planning to start this journey or have started and are struggling with this aspect of it?
Yes. And look, for this, you need to find balance. I mean, every person's circumstances will be different, obviously. Age plays a role. It's different if you're 25-year-old with no obligations compared being 45 or 50, where you may have kids, you may have,
Correct.
schools to pay and all that stuff. So but when you do a new startup, you need to take a risk. There's no other way. Risk-free and startup, they don't go together. It's
Absolutely.
So you need to find a balance. I mean, I've seen some of the entrepreneurs being in the situation that you describe, where they're not like 25, they have some, responsibilities and obligations, financial at least, where they design the first startup and nobody works for zero. Okay, let's be realistic. And if it's for zero, if there's no salary at all, it will be for a very defined number of months. You cannot do that like for 2 or 3 years. They don't take a market rate salary, but they somehow find a combination with maybe some funding, some personal savings they have, or some others, because if it's a team where they kind of balance that, maybe you get 50-60% of the market rate. Obviously you have your equity, and you try to balance this based on your circumstances, obviously, right? Timing is very important, because you don't want to start a business where your personal runaway is only 6 months without salary, and then you drop, say, look, guys, sorry, I got to find another job now because I cannot sustain. You need to plan that, okay? It needs to be the right time for you and for co-founders. But is there a golden rule for everyone? I doubt. It's case by case.
Of course, it's case by case, and as you said, it's all about finding that right balance. And that's critical in finding these things. Now, since you have experience with so many startups, yesterday we were having a discussion with Professor Todd Zengler. He's a presidential professor at Utah, and he works on the science of startups. So how to make startups more successful through a scientific process. And one of the things we were discussing was on the fact that about failure in startups and how to, test your theories to minimize failure and so on. So more importantly, one thing that came up was you have very few entrepreneurs who just refuse to fail, and they're able to push a lot more. So if you say, hey, I will either die or make this succeed. I mean, that's an extreme example, but Elon Musk reminds you of that. I mean, he says that he would give away all his wealth, every single last penny, to make sure that his rocket flew. And 3 of his rockets blew up. The 4th rocket went, and that too with I think he invested last of his money in there. And then on the other hand, you have others. Most people, I think, fall into that category, who are willing to push a little bit, and then when it gets very difficult, everyone has a different point. Say, okay, this can't work. Let's pivot. Let's try and change, and let's try something else. Everyone has a different viewpoint on this. Which one is better? You might end up. I mean, Elon Musk might have succeeded, but there are lots of others who have fallen down the graveyard, who tried and didn't pivot. And the other hand. So where do you stand on this? What's your experience been? What would you advise a new entrepreneur?
Yeah, I mean, with all these things, first of all, to start by saying, when you read about these kind of successes, first of all, they are the exceptions. That's why they become news in the first place, right? That's not the average, okay? So, and it's good that you have the exceptions you read, because they inspire you, but if you take, like, for example, 100,000 startups, how many of them will actually end up being like, invest all the money for the Rust rocket to succeed? Maybe 1%, 0.5%, and not even the 80-20 rule, So I wouldn't put all my eggs in this basket, as the British say. So and this is where the point of what we say lean MVP, it plays a huge role, and this is one of the mistakes I did for my first startup, which I mentioned before. So one of the most common mistakes that many entrepreneurs do is, and I did the same as well to a certain degree, they try to fulfill their vision from the MVP. So let's say you want to build a new Amazon, okay? So you try to build the new Amazon to compete with Amazon from the first version. That's extremely unlikely to happen because it is an exercise that takes dozens, thousands, hundreds of thousands of steps to get there. So the lean and agile MVP means you spend enough time to develop the very core of your idea. And I'm not talking about if it's a biotech or a new AI, which needs R&D behind. Let's keep that out because that will require time, okay? Let's take the other type, SaaS models, for example, where you test it as soon as you can with your targeted audience, okay? So a common mistake that they do, and I did that as well, you spend months and months and months developing something which you haven't tested with your audience. And you go to the market, and most of the cases, the market doesn't need that. Or there is an alternative you didn't know. Or they ask you to tweak and pivot in such a degree that you have to re-engineer everything, okay? So I'm in the school of thought where it says, get out there as soon as you can, test the concept. Does it work, yes or no? And then build on it, And if you see successful startups, because Amazon was a startup at the beginning, right? What did they do?
Absolutely.
They start selling books. After 30 years, is the most complex e-commerce, logistics, warehouse, digital platform on earth, right? The same with Facebook. Right. Started with the image, I like, I don't like. They didn't start having all these apps. After so many years and iterations, they end up being what they are today. The same thing applies, the same logic is. So I'm with that school of thought, and you need to be brave enough and understand, well, this doesn't work. Let me, either I tweak it or I drop it and I move to something else instead of hanging there forever.
I tend to agree there. And I think that's the right approach for most people, because the other extreme is also very taxing mentally, keeping, even Elon Musk was talking about, though he went down that route, he talked about how difficult it was, how stressful it is. And I don't think most of us are even capable of absorbing that kind of stress and taking that on. So moving on, I know that I wanted to look at a few trends that, you feel, since you have a pulse on the startup industry, certainly for the Middle East region, I wanted to check with you, what are the trends that fascinate you and you feel will have a huge impact going forward from this, tech and startup world?
Yes, obviously everybody's talking now about AI, generative AI, that, it's coming so fast. You can see so many tools now, around, they're now even specific for, sports blogging, if you want, or artists, or they start to get specialization as well, not just, give me a text, I will rephrase or find the information for you. So this will definitely shape, the next few years. It will impact, obviously, employment. Will it take over completely the job of artists? No, I don't think so in the short term. But definitely, if you had before 10 researchers, maybe now you need 7 plus the tools. You're always gonna need the human, for the number of years. I don't know how long, but definitely. But even it touches things like movies. The movie industry now. Imagine if you have, for example, someone who looks like Robert De Niro, but is not Robert De Niro, or sounds like Al Pacino, but he's not Al Pacino, and then you can throw them a plot, and then all of a sudden you can create a movie which is not going to be Oscar winning, but it costs you a fraction compared to what these salaries of these guys get, right? So imagine, so there was an interesting blockchain technology where they wanted celebrities and famous people to lock their digital avatar. So if it's being used without their permission, they have a legal right to go after you. So, for example, if I'm Al Pacino, I can look avatar, even some kind of look like me, and say, look, whoever is using any of these type of avatars for advertisement or for movies, they might have some implications with the law. So these kind of anti-measures obviously will come as well. Okay. Now, what is really fascinating me from technology trends, although it's not something which is gonna, be over the next 2 or 3 years, is quantum computing, because I think this will change the world significantly. I mean, they already, I think, announced last year that they achieved quantum supremacy. So today we know that the silicon basis, of chips and era is coming slowly to an end. That we cannot go minimize, make smaller chips, because at the end of the day, we go to the level of and this is where quantum computing kicks in, where even today, by task, it can be 1 million times faster than any supercomputer on a specific given task. Not everything, obviously. So imagine if this power comes in the next few years, after 2030, embedded with AI, what power is going to give you to analyze data that we cannot do today. For example, human brain. We cannot map the human brain. There's 100 billion type of neurons with 10,000 connections, each of them. Yeah? You cannot analyze huge data or coming from the space, So this will it will change, or even climate change, I mean, you'll be able to analyze weather in an unprecedented way, going into the molecule level. So it will revolutionize pretty much everything, as long as, I think we lost.
Yes, I guess some internet problem.
Okay. I can wait, or shall we continue?
We shall continue. I will ping him.
Okay, fine. No problem. So it will revolutionize many industries, even medicine. I mean, you can even develop a personalized drug based on what your organism is more likely to accept and have the best result. So quantum computing is really fascinating me. Obviously, each technology is a double-edged sword, as the British say. It can be used also for evil ways, like, for example, breaking any type of military encryption. Today, any supercomputer will probably need hundreds of years, if thousands of years, to break encryption. When you put that against the quantum computing, it might be a matter of hours or a matter of days. So obviously we create opportunities for both positive and negative things.
Yes.
But it's definitely one, group of technology, I say one vertical that is really going to change the world. Other stuff I've seen, which is really good, but it's more like scale, is things like digital twins. Everything is going to become, all schematics will go to be for virtual buildings. Everything will be translated to something with have a digital twin, but also will be helpful for, and when I'm saying that is I have a GE, when I was there, we used to have a health and safety. And I know from implications that, all the trainings that you do at the corporate level, they might be boring if you just have to do, watch videos. When it comes to training where it is in a virtual environment or even mixed reality, where you actually see that if you're not careful about with this tool as an engineer, you may lose your hand, for example, because that is the scenario of the training, that becomes, way more impactful, and people do learn things much faster. They absorb the content compared to doing some boring, YouTube or checklist. Have you understood this? So this kind of technologies will the way that people, get educated and react to better be part of a culture of the company.
Yep. When you were talking about the avatars in the film industry, that remind me one case. One of the superstar of India signed a non-deal contract with a PepsiCo company. I don't remember the exact company name, but let's think it's a PepsiCo company. And a PepsiCo company shoot one advertise with him, and they are using the same avatar of the sun to advertise the other brands as well using deepfake AI.
Okay, but with his permission, right? It was a
Yes.
Yes.
So it's a win-win situation for both of them. Like Shah Rukh Khan will have not to go to every time for a shoot, and he will get the money, and it will be the price benefit for the PepsiCo company as well, because Shah Rukh Khan is very costly. So recently, I just had been to one of the networking event where one of the young startup founder was saying that if you have an idea, just before going to the market, go and try to sell to your family. If your family is convinced with your idea, you can easily win the rest of the market. So do you agree with that?
I would say probably, your family will be the first test. yes. Unless you have a very big family with, I don't know, 100 members, I will probably extend that to a bit more to family and friends of friends. I'll give you an example of what a lady did here. It was a fashion startup, by the way. So she wanted to have an e-commerce where women can, expensive and high mainstream type of clothing. It's like a cycling economy between them. So instead of buying, most women want to wear something new every weekend, right? If they go out. So instead of buying expensive dress, they will rotate or lease between them different dresses, okay? But what she did to validate the demand for this, create a very simple Google form survey, 10 questions. Will you do that? Will you be willing to pay? Will you rent out your clothes to others? She was assuring about, deep cleaning and all that stuff. Everything was hygienic and things like that. And will you be willing to pay subscription for this? So she sent this Google form to 20 of her friends of friends. She ended up having like a input from 300 or 400 women, if I remember well, okay, within Dubai. I mean, the sample is not huge, but it's within the target, 25 to 45 years old, they possess of high mainstream clothing. I don't remember the brands, to be honest, now. And she got a very good feedback. Over 80% said, yes, I would be willing to use a system like that, and I would be willing to pay subscription, $20, something like that per month. So she had data to kind of validate and then said, you know what, well, now let me just create a simple e-commerce Shopify. Let me see if this is going to actually work. And she's been doing that now, and it's working. I'm not sure about the scalability of this yet, but it's working in terms of, so this is how she tested the concept and the demand. So you can do simple things like that to validate the idea. And then obviously idea is just one thing. It's the execution that matters, is depending what you do, of course.
Personally, I think it's a great solution.
That was brilliant.
Especially in this world of fast fashion and so much of wastage that we are creating.
Oh my God, yes.
And I think if we can scale this and across the value chain, I mean, I know she's targeting the really rich, but I think across the value chain, I mean, in India, my friend had a startup on fast fashion along the lines of Shein. In fact, they were leveraging Shein's, manufacturing capabilities, because Shein's not allowed in India, or wasn't allowed. I think now they are partnering with Reliance and making an entry this year, but they were banned for a while. And so he was leveraging their warehouse, and he was saying, and it was fascinating. I was working with them for a while, and to see the demand for this fashion, everyone wants to look nicer. It's just not because the rich, everyone wants to. And so, but even there, I was thinking, even though the cost is quite low because it's fast fashion, so much of wastage. He was telling me most of these women in their early 20s have cash. They just wear the dress once.
Yes. And the return is also a headache for the online businesses, because the return,
True.
if I remember well, the return for clothing is 25 to 30%. So which it gives a headache for logistics, where you store that, and what a lot of women do. You know what? I mean, I remember in some cases from ASOS, ASOS in the UK, they will order 5 dresses to keep one. So they order 5 dresses, they tell I don't like it, doesn't fit, but the other 4, and ASOS had the warehouse just for that, for the returns. Now, when technology comes to that, and I've seen that for a few cases, where VR and technologies, it reduces the return rate, because now it's not about zooming, it's about, you can go down to the detail of also seeing who is signing, if it's a signature type, or the level of detail you get with AR, VR technologies, especially if you can see how it fits out in you and things like that, it reduces the return rate. So there's another use case for how technology can help with that, but definitely it's a headache regardless.
That's true. And maybe I'm just thinking ahead in the future, we have some kind of dresses which can be remade quickly to different sizes.
Yes.
Adjusted, right? So because every person's body is slightly different.
Yes,
and
exactly.
Which is why we have all these returns. We might say I'm a size 8 or size 10 or size 12. And then in certain dresses, I am a size 12.
Yes.
But in another dress, that doesn't work. I need a size 14.
Exactly. One of the things I liked I think it was Back to the Future, and not the second movie, where he's wearing something and it adjusts to his height and body shape. Yeah, I would love something like that,
Come.
Yes, hopefully. Now, another example of how you validate is one of the first e-commerce very popular called Zappos in the US. Okay. So I don't
Yes, I
remember
know
the name of,
Zappos. Yeah.
yes. So I don't remember the name of the founder now, but how he validated the demand. So instead of him going to create an e-commerce, back then, 2003, 4, 5, whenever it was, doing e-commerce is not like Shopify where you go and buy a license, you create your account, and in 10 minutes you have your e-commerce. It was a custom-made job, you know? So
Correct.
he went to shops and took pictures of shoes, if I remember well, okay? Different type of shoes, different type of, and he said, look, he created a very simple HTML static page where he said, okay, this shoes is $50. You're gonna buy. So, and then only when still putting orders, he was getting paid, I think, upon delivery. So someone was paying cash to receive, and he was getting the money through a service like that. So the only point where he said, oh, I need the technology for this now, is when he couldn't keep up with the orders, because at the end of the day, he had his whole flat was full of a box of shoes and things. He couldn't keep up manually. Only then he started creating a website, an e-commerce. So the same kind of concept, can be applied to, validate the demand before you automate. We also do that in corporate. So if someone, for example, when I was at GE, okay, give you a corporate example as well. Okay, GE was never a software powerhouse. It was always developing some things in house, okay, but it pretty much was purchasing off-the-shelf software in pretty much everything. Okay, so if I needed a new software to do, if I remember well, it was a file server type of software. The first question my manager will ask me, okay, what is the use case? How many hours do we spend manually today? How many people getting involved? Build the case. Let me see how much we will save from this if I build a new technology. And then if productivity is too, you lose productivity because someone is doing manual things for many hours, or you engage more than 10, 20 people, that case makes sense. So the same kind of logic also goes for the startups, Build the demand, then you start seeing what else you can add to your technology or offering.
Yeah. Your core, this. Yeah, Zappos was an interesting story. I mean, I remember
it's a very good
I read the book.
For this. Yes, yeah.
And one of the things they differentiated was on customer service, if I remember right. They had no questions asked, returns, and so on and so forth. Quite revolutionary. Amazon bought it, right? Zappos.
I don't remember, but it was definitely over $1 billion type of valuation.
Yeah. It became more than $1 billion.
Yes. I'm talking about 20 years ago, which is, today's figures probably it's way above a unicorn. It's
way above. Yeah. Probably worth 10 billion at least.
Yes.
In today's money. So moving on, I was thinking about talking a bit about, we talked about failures, we talked about, what startups need to do to succeed. But also I was thinking about the role of success in the field of startups, meaning I love the power of winning. It's by Ian Robertson. He's a professor from the UK and a famous psychologist. And when his kids came along, he was wondering how to ensure his kids would succeed. And one of the things he found was no matter what he did, it's the ability of the kids to win and their impact on their confidence, which had according to the research, the biggest impact on their chance of success in the future.
Yeah.
So a fascinating book. And so he goes about trying to create small wins. And he says the importance of small wins for everybody, right? Even companies, teams. And he says, don't go about trying to fight the big fight right away. Go and win some small wins because of the effect. And in animal world, what's fascinating is they found, fishes. They take the two fishes of the same size, one fish, they make it fight with a few smaller fishes, and and it wins because it's smaller. The other fish is smaller, and then they make it fight with the original other equal size fish, which hasn't fought with other small fishes. So it doesn't have this confidence of winning. And they have found that 87% of the times, this fish, which has won with two other smaller fish, will win.
Yes.
So it's a fascinating thing. So I was thinking about, in the startup world, of course, chance has a role to play to succeed. But do you see this playing out in the entrepreneurship world as well?
Yes, I mean, the more experience you gather, the more likely is to be successful. That's why initially I said when, the beginning, that some companies or some people looking for employees, they're looking someone to have failed before. because you lost your first
Right.
fight, but you didn't lose the war, you know? So it's the same
Correct.
mentality. So, and the issue what you have when you do a startup, because it's your baby, you're biased, you want to create the perfect type of solution. And I did the same for my startup again, I repeat that. It makes you a bit blind or the small steps you need to get there. Okay. That's why you see more mature entrepreneurs at the 40 years age and older, they're more likely to succeed. And success in the startup is not just fundraising, right? This is just the beginning.
Yeah.
You know, whether this is going to be a long-term game for you, you do that, you retire, it's a sustainable financial business, or you exit at some point, that's the success, you know, for both the investor and the entrepreneur. It's not just raising money. You know, some people, oh yeah, raise money, and after 2 years, they're nowhere. You know, it doesn't. There are so many cases of companies raise 40, $50 million rounds, and they don't exist after 2 or 3 years. So the fundraising
right.
is not the optimal. It's not the only. It is a small win to that, but it's not the end goal. You know, the end goal is you know. So this is what a lot of entrepreneurs in way they think that.
Right. So I think I wanted to thank you, Nick, for giving us so much of your time. I want to invite you to India as and when you come.
Yes,
You haven't
it'd be great.
visited.